Is it finally safe to buy the dip in Alibaba stock? Is this the bottom? Are we set for a gigantic rally in Alibaba shares? We'll talk about that and more on today's show. What is going on, investors? Hopefully, guys are doing well out there. Time to talk about Alibaba Group, which you've been following us here on the channel, has just been on one of the most major downward channels that we've seen in the stock market in a very long time. We will talk about this stock from a technical perspective as it makes its way. I mean, there's a bunch of stocks that are making this downward channel move. Alibaba popping today, and this is on the heels of reporting their full year and Q4 earnings, which that, along with some positive news around Alibaba and all the regulatory environment that they're involved in, not only here in the United States, but in their home country of China as well. We're seeing a little bit of relief there as well. Obviously, Alibaba reacting positive to that, up over 14%. I am recording this during the regular trade. But look, over the last year, you have gotten absolutely smoked on this stock, down 55%, year to date down over 21%. There's probably very few people in the world that actually have a positive gain on their Alibaba stock. So if you bought this one at a higher price, guys, don't worry. Almost nobody has a gain in these shares, because even after today's kind of surge in the stock price, we haven't seen the stock price this low in 5 or 6 years over at Alibaba. Now, again, this comes on the heels of announcing their Q4 earnings. Revenue was up about 9% year over year. They did beat expectations both on the revenue and the earnings side. I'll come over here to these numbers and I'll show them to you. And they're not easy to understand. They're not easy to digest, but I will make them the best as we possibly can. I'll help you understand everything that's going on from a financial perspective over at Alibaba. Now, the other things that we're trying to digest with Alibaba is the fact that they are battling with regulation and potentially maybe even delisting by the SEC here in the United States, but they're also battling their own governments. But it appears that maybe we're going to start to see a little bit of softening. Okay, after the stock is down over 50% over the last year, all of a sudden China's like, well, maybe we shouldn't really kill one of our largest companies, and maybe we should, pump the brakes a little bit. This is obviously on the heels of the company referring to Alibaba paying a massive anti-monopoly fine. We'll see that when we get over to the financials. They did improve quite a bit because that fine actually occurred in this quarter of last year. Now, the other thing that's hanging over Alibaba is the SEC here in the United States wants more transparency around audits and these financials. And I tell you what, when we go through these financials, they could be presented way better and way more like a United States company. I think if you're going to be listing here, you're going to take United States investors' dollars, you really should do your financials almost exactly like United States companies. That's just my opinion. I hope the SEC actually forces companies like this to do that. I think that would be actually a benefit for Alibaba and its shareholders. Now, in terms of some positive news that we saw today as well, the company is continuing to extend its share purchase program. In fact, they expanded it from about a $15 billion buyback all the way up to about $25 billion. So they're buying back these shares. That is absolutely a positive for you, the shareholder. Now, in terms of the financial results, the first thing that we'll look at is kind of the growth of the different segments that Alibaba has. They have this total China commerce up 8%. We've seen higher and faster growth rates with Alibaba, but also factor in, obviously, we're still in a pretty serious virus situation over in China. There's kind of starts and stops over there. That's likely and absolutely hurting Alibaba's business to a certain degree. We see that up just 8%. We see total international commerce just up 7%. What I also notice is their cloud business grew just 12%. Certainly when you compare that to an AWS or a Google Cloud or an Azure Cloud over at Microsoft, definitely on the low end of that growth rate. But again, these are some of the things that kind of came under fire over at Alibaba in their home country of China. Regulators kind of wanting them to pump the brakes on some of these other businesses that they could gain a large competitive advantage. When you flow down through all the income that Alibaba made over the last quarter, we come to about $32 billion worth of revenue. Again, that was up about 9% year over year. Now, in terms of their profitability, We pull down that 32 billion. So I talked about how they had 32 billion, and I'm talking about United States dollars, $32 billion worth of revenue. We pull that $32 billion down here in the most recent quarter, and then we walk through all of our costs. And the one thing that I noticed over at Alibaba is the fact that we had a gigantic decrease in this general and administrative. In fact, it went from over 27 billion RMB, that's the Chinese currency, all the way down to 7.4 billion Chinese. And that is related to a fine that Alibaba had to pay last year to the Chinese government for anti-monopoly kind of practices, or a fine that they had to pay. So that really swung us to positive income from operations. So you see, last year we actually lost 7.6 billion RMB. This year it's swung positive to $2.6 billion. Now, unfortunately, they had some interest and investment income, which went negative in the most recent quarter as well. So you get to pull down all the way to kind of a net income number, and we're still negative on that net income number in the most recent quarter at $2.5 billion. Now, when you look at it for the full year, paints a little bit better story. You had about $134 billion worth of revenue. I'm showing on their earnings estimates that widely exceeded estimates, okay? Estimates was closer to about 127. Alibaba came in at 134 for the full year. I think that is providing a little bit of positive upside in the stock as well. And then when you pull all the way down to all the cost, all the net income, you get to about $9.7 billion worth of positive net income. That's about $3.59 per share on an earnings basis for the full year. What I noticed though in these earnings estimates, and then when you come over here to like the quote of Alibaba, they're saying their forward PE is 10. And so obviously that's incredibly low. I mean, that's like, value stock type low. And their PE multiple obviously is compressed over at Alibaba. I mean, when you look at this stock chart, your PE is obviously going to go down. But I just showed you that this company did in the full year $3.59 diluted for the full year. Revenue estimates for that year was $7.67. And yes, that is a 10 PE, but this EPS estimate was wrong. In fact, it was wrong by a factor of almost 2. And so you actually get a PE, at least on a trailing 12 months basis over at Alibaba, closer to about 20. So it changes the story a little bit. Now, if you want to look forward to 2023 and you believe that Alibaba will get into that $7 to $8 range on that EPS side, certainly could be something that they do. So it's possible with Alibaba, if you start to look out, yeah, you're at a PE that's relatively attractive, especially compared to the rest of the market. And certainly historically, when you look at an Alibaba, this is a stock that traded for a much larger and larger premium than that. So I just wanted to point that out. There are some discrepancies between the earnings estimates that I see here, some of the earnings that they actually printed here, and obviously that will impact when you look at financial sites. You'll see a forward PE of 10. That is assuming that this company really accelerates these profits heading into next year. Obviously, if you believe that, certainly can be a fantastic buying opportunity for Alibaba. Now, from a technical perspective, it's amazing. I haven't looked at this stock in a little while. We've had these lines marked in really since the beginning of the year with Alibaba, and it's surprisingly, they've just continued to hold. And this is why here on the channel, we constantly talk about when your stock makes this downward channel formation, this is not, and I repeat, not a buy the dip stock. When your stock goes in this fast of a downward trend and gets locked in these downward channels, boy, it takes a lot to move the stock out and out of these channels. Now, take a look. When we zoom in here to the more recent price action, you're seeing, yes, we put up a big green candle today, up over 13% during the regular trade. This stock will likely bounce around, but guess what? We're basically right back to the top of the channel on this one. So a couple of things can happen, and I don't want to make it seem like I'm kind of talking out of the side of my mouth and maybe trying to hedge my bet saying this stock's either going to go down or sideways or up, but this is the situation you're in with Alibaba. You're looking, if you're bullish this stock, you're looking for green candles above this active trend line that we're in, and boy, that would be a pretty bullish move. You get out and above this channel. Now, it has peaked its head above the channel, depending on where you want to kind of draw this upper trend line in. It's peaked its head up above it. So the bullish move would be solid candles well up and above it, probably outpacing these highs that we made back here in May over $100 per share. You get over $100 per share on this one, at least in the shorter term. We're probably talking about maybe a couple of weeks time. It could signal that you've reached a little bit of a bottom down at this range, down about $90 to $100 per share over at Alibaba. The other thing that I wanted to just broadly look at is we do have this stock just pulled back into just a beautiful zone. I have these two levels marked out with this stock for a very long time. Down here south of about $80 per share, basically between 60 and 80. These were kind of the natural areas where this stock would likely find some demand, because quite frankly, this is where the stock bottomed out all the way back in 2016. So there's certainly some opportunities here from a technical perspective. I don't think you need to like rush into this one, even though, yeah, you have a 13% gain today. I think you could, even if you get above this channel, you could come back and back test it. You could come back and back test the lows closer to about $80 per share before resuming some form of kind of an uptrend. What you're looking for is the stock to go from, instead of channeling downward, to start actually channeling up, or at least sideways. That certainly could be an area and an indication that Alibaba is starting to make a bottom. Now, again, I don't think you need to rush into this one, because take a look at the momentum. If you get momentum on your side with Alibaba, there is so much green space above this stock. Levels of resistance really don't start showing up till 120, 140, 160, 180. These are plentiful gains that I don't necessarily think you need to rush in if you're comfortable with a stock like this. And that's really the emphasis. The headlines with the related to the SEC, the headlines related to China have been unpredictable and very hard to judge. And just simply for my taste, that would not be a stock that I was interested in. When you have the SEC here in the United States talking about delisting, audit transparency, would make me nervous as an investor, and just somebody that is not familiar with China and not confident in the news flow that I get here in the United States about China, just would make me uncomfortable as an investor. But from a technical perspective, this one looking like it wants to bounce off this area. We're looking for green candles up and above this trend line. If you get rejected, so I've really just walked through kind of the bull case scenario over at Alibaba. Quite frankly, the higher probability thing that will happen is we get rejected at this price range at about $95 per share. And quite frankly, we continue to do what we've done all year, and we make a move back down to the bottom of the channel. That would take us down probably south of $80 per share. And you've got some fantastic levels, quite frankly, down below $80 per share. If you've been bullish this name, I actually think you want it to pull into that zone, because a lot of things start lining up down at those price ranges. And obviously, when you look at this from a valuation perspective, even if these earnings estimates are a little off, you're not paying a huge multiple for the earnings, and you're certainly not paying a huge multiple for the sales. In fact, at the current time, you're paying just a fraction, about 1.5 times sales over at Alibaba. But when you look at like an Amazon, you look at a Walmart, they typically trade in that range as well. You're never going to get a huge premium on the sales for these types of stock, but the earnings multiple could be, I think, a lot larger than where it is with Alibaba. Once we get through the regulatory things with the SEC, once we get through the things in China, obviously it's taken a really long time with the stock, but if those things start to ease, well, this stock has a long ways to rally, in my opinion. Hopefully, you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.